Good evening, ladies and gentlemen. Welcome back to Rainbow Investing, where we examine the spectrum of ideas to increase your long-term wealth. Now, today we are looking at 3 stocks in the month of December. Without further ado, let's get started. So the first stock I want to talk about tonight is Apple, ticker symbol AAPL. Now, this stock is traded on the Nasdaq in the United States, as most of you probably know, and it's been looking quite cheap lately if you look at recent prices. Now, this recent price decline is due to institutional investors getting a hunch that Apple are not going to sell as many smartphones into the future. Now, Apple in their most recent yearly update have said that they're going to stop publishing the amount of iPhone sales per individual units every year like they've done in the past. Now, this has really spooked the market because it's giving an impression that iPhone sales have slowed or are not going to grow too much into the future. Now, Apple was trading at a record high as recently as the 3rd of October when it hit just a bit over $232. Now, the other day it was trading at $194. That is a huge fall. And it's also its lowest price since the 31st of July of this year. So many people who are bullish on Apple are taking this opportunity to buy the dip. And I'm certainly keeping my eye on Apple stock for the next month at least to see if it goes any further than this or if it bounces off the bottom and keeps going up again. One more thing I might mention about Apple is guess who's probably going to be picking up shares at probably even this price, and certainly if it goes a bit lower. That would be Mr. Warren Buffett. He has made a huge position in Apple recently and he'll only be adding more. So, I mean, you could do worse things than following Warren Buffett. Now, the second stock I'm going to look at tonight is Google, symbol GOOGL. Now, this stock has been on an interesting ride lately. It's actually been trending down for quite a while, but it's actually approaching its lowest price since the start of May. So investors who are bullish on Google, it might be a fantastic opportunity to pick up some shares. Now, Google actually hit its all-time high at the end of July when it touched just a bit over $1,285 a share. But it has been trending down ever since then. Today it's been trading at $1,048, but it actually bottomed out on the 29th of October at $1,035. So that's still quite a big decline from its all-time high just a few months ago. Now, Google has been trending down ever since then. But again, if you're bullish on Google into the future, it might be a great time to look in. Now, most people know Google from their search algorithm, which is obviously the most popular service that it provides, but they provide so much more. They've been getting really into AI technology, and Google is a company with a phenomenal cash flow. They are investing all that money into all these things in the future. Self-driving cars, artificial intelligence, robotics, automation are all areas that Google's exploring, and they are sitting on a huge pile of cash.
So let's just jump over to my laptop now and we can really see where the majority of Google's revenue is coming from. So the majority of Google's revenue comes from its advertising business, AdSense, and they're an absolute beast in this area. So some of their other services like Google Cloud, their apps that they run, Google Home, those home speakers, are starting to contribute a modest portion of their revenue, but as of today, Google is still an advertising company at its core. But it's these other bets, these areas of growth that have got people most excited because a lot of people think in the future that they could become as profitable as the advertising business.
So a lot of people are really bullish on Google's future, and you can really understand why. Now, the third and final stock I want to talk about tonight is actually an Australian company. You may know it as Afterpay, but its full name is Afterpay Touch. Now, this is a roller coaster of a stock. The stock has almost tripled in price since the start of 2018. And on August 24, it hit its all-time high of $21.13. Now, since then, it's been on a pretty big decline. Today it was trading at $11.60, but it actually bottomed out on also October the 29th at $11.31. So, I mean, if you're really into the thrill and volatility of the share market, Afterpay Touch might be one for you. But it's really a stock that trades on its future growth, not on its growth right now. So in a way, people see Afterpay as an Australian success story, but really it hasn't been successful yet. But this share price of $21 indicates that people are expecting it to do huge things, which it is. It's expanding into America. There's plans to expand into the UK, but they haven't really done this yet, and they haven't proven that they can keep that expansion going and build a sort of long-term fortified wall of earnings. So if you're feeling a bit more risky, Afterpay Touch might be one to sort of buy this dip at. But it's a very risky company, and you should definitely keep that in mind if you're going to be investing in Afterpay. Alright guys, that's my 3 stocks for December. Now remember guys, this is just general advice and education. I'm not a financial advisor, so if you're thinking about investing in these 3 companies, do your own research. That's all I've got for you today. Thank you for watching. If you enjoyed this video, hit the subscribe button, hit the like button. I'll be back with some more videos soon, but for now, good night.